In this section, we're going to talk about all of the aspects of having a checking account. And checking accounts typically involve three items: the checks themselves, a check register, and bank statement. Now, the checks are little pieces of paper on which we are writing information which allows somebody to get money out of our account, basically. And a check register is a little form that we use to keep track of the checks that are written and deposits that are made. A bank statement is a statement that comes from a bank and gives us information about all of this activity that has taken place before. Well, let's go through each of the items. Checks have this appearance. Now, mostly we're going to be concerned with check registers and bank statements, but I'd like to start, just for completeness, I'd like to start with the idea of a check. And notice the aspects of a check, the items that are on a check. Name and address of the person who has the money in the account, generally is up here. And over to the right, there is a check number in the upper right-hand corner. Below that, a date is written. And pay to the order of means that we are writing in this blank the person or the business which is receiving money out of our account. So we're paying money to the order of this entity. And the amount of money is listed here in dollars and cents. That amount of money is written out in words on this blank. And there is a place to describe what the check was written for, and then this blank is for the signature of the person who owns the checking account. Well, let's go through and write a check. Let's say that this check is written on June 29th. So I might put 6/29 here. And then 2000, let's say sometime in the past, 2002, let's say. Then pay to the order of, and let's say that we're writing this to the cable company. So we would have ABC Cable Company or whatever. I'll just put cable company here. All right, and let's say the amount of the check is $30.25. Here's how we would write this. Now we can write 30 and then the decimal and then 25, but as a precaution, a lot of times the 25 cents is written like this with a little line under it. And that's to prevent some fraudulent activity involving checks. If you put a decimal and then 25 following the decimal, what if somebody just erased the decimal point? Then it would look like $3,025, you see. So the amount could more easily be changed if we don't do something like this. A lot of people even put two lines under here like this. It doesn't make any difference. All right, now here, we're describing the amount of money in words. So it's $30.25, and we are writing this in terms of some number of dollars, notice. So here's how we do that. So it's the whole numbered part, the 30. You see, and you would describe in words whatever the whole numbered part of the dollars is right here. Then the word and. And now we're going to describe the cents. The cents, it's 25 cents. But that's what part of a dollar? You see, that's 25 hundredths of a dollar. So it's 30 and usually it's done like this, 25 hundredths dollars, like that. All right, and it's for the cable operation, and then we would sign a name right here. Okay, and that's how it goes. Now, once a check is written to someone, that person cashes the check or puts it into their account or whatever. It goes through a big process. It changes hands a few times. It gets back to the bank eventually, back to our bank. If this is our check, it gets back to our bank eventually, and the bank makes note of the transaction. We'll get to that in just a little bit with a bank statement. But when we write a check like this, we need to keep track of how much money remains in our account from day to day. So we keep track of checks in a check register, and a check register looks like this. Now, we're going to have to pan this a little bit, but these are the aspects. We're going to come in close here and then pan over to the right, and then we'll come back to specific entries. But notice that we have date and check number up here at the left. Now, these might be swapped around, but date and check number are up here, a description of the check, who it was written to generally. a little column for checks, and I'll have a lot more to say about this column in just a little bit. Then the payment, the amount, you see, of the check, and there's a column for deposits, different column for payments and deposits. Now, this payment column might also be designated as debit. Debit means to subtract or take away from your account balance. Deposit might also be credit because we're adding to our balance with the items in this column. And then over here we have a column for the balance. And so we might go through and do this. If we just written a check, then we would enter that check into our check register like this. The date on the check was 6/29, so I'll do this. And then it is check number 126, remember? And it was written to the cable company. And it was written for $30.25. Now, the checks, the amount of the checks are in this column, so I'm going to enter $30.25. Now, notice that I have only one balance on the check register. It's way up here at the top, and I'm going to talk to you about maintaining a balance in this column in just a minute. But let's come back over here and just kind of have a look at the various entries. We have an entry up here on 5/23, check number 120. And I'm not going to go through every one of these in great detail, but it's important to know that we have check numbers here, who the check was written to, and then here's an item for a deposit. So we had a deposit on 6/7, you see, and we enter the deposit in a different column from the entries for the payments or for the checks that were written themselves. All right, so that's the idea, and we just flow all the way down with it. Now, to maintain the balance, to understand how much is in the account all the time, to make sure that we don't overdraw our account, we might want to do this. Now, some people, everybody has their own little particular way of doing this, but some people calculate a balance after every 5 or 6 checks, or maybe every 2 weeks or something like that, to make sure or to verify what they think they have in the bank. Some people make an entry for every single item. Now, let's make an entry for every single item here. If we don't do that, then here's what would have to happen. If we came down to a level like about right here, we want a balance as of this date, let's say, then what we would have to do is this. We're writing these checks all the way down to this level. Now, presumably the balance of $845.20 has already taken under consideration this $12.50. So if we want a balance that's way down here, we would have to subtract all of these items. You see, all of the items down to that point. And we would have to add the items in this column, add the deposits. It's pretty intuitive. It's not a very, very difficult thing to do, but we need to understand the concept of the whole process. All right, let's go item by item here. If we start with the balance of $845.20 and we write a check for $240, then we would subtract that amount from our previous balance. So subtract $240 from $845.20. Let's see, that would be $605.20. Now, you might have noticed already that I have chosen some very convenient amounts for the checks and the deposits. That's just to make things easy for me so that I can add and subtract rather easily here. They won't end up being like this. We won't be able to do these in our heads all the time. You need to go out to the side and jot them down if you're doing them arithmetically, or use a calculator to make these calculations. But it's really important to keep track. All right, let's go with another couple. We have a check of $400. That means we subtract that amount from this, and that leaves us with $205.20. The next transaction is a $500 deposit. Well, deposits are added, so we add $500 to this, leaving a balance of $705.20. The next item I see is a $55 check that was written. So I'm going to subtract 55 from $705.20. And I'll get $650.20. Then I have a deposit of $300, so I add $300, I get $950.20. And then I have a check for $200, and I'll subtract that. That leaves $750.20. And we get the idea of how this flows. All right. Now, mistakes could be made in this whole process, and we can check for those mistakes in a couple of ways. You can redo the calculation, for example. But generally, you'll catch mistakes when a bank statement is received. Now, this is what bank statements look like, and they can have a different kind of style associated with them. But these are the major aspects of bank statements. Bank statements have dates and transaction, amount, and balance. Now, the date is the date of the transaction. It's not necessarily the date, well, it probably won't be the date that you write a check. If the transaction is a check, then it won't be the same day that the check was written. Certainly not, because that check that's written, for example, to the cable company has to be delivered or sent to the cable company, and they have to deposit that check into their bank, and their bank has to send it to our bank. You see, so it takes a little time for all this to occur. It might take several days. And therefore, this transaction date will not be consistent with the date on the check. Okay, so we can kind of expect that. But let's see, the transaction. Now, in this column, notice we have an opening balance. We have a check, a deposit, a check, and some interest that's been earned on this account, and a closing balance. Now, not all checking accounts have interest associated with them, but there will be bank charges or credits involved in this whole process. Bank charges might be a charge for, let's say, for printing checks for us. You see, if the bank prints checks for us and sends us those checks, they're going to charge us, and they'll charge us on a bank statement like this. So that would be a debit. That would be a subtraction, you see, in a situation like this. And some bank statements, by the way, will separate the checks from the deposits, the credits from the debits, you see, or the debits from the credits. But this one has all of it all jumbled up, it seems like. All right, here's what the bank is doing. The opening balance is $845.20, and by the way, that was the opening balance that we had over here as well, $845.20. Check number 121 was processed by the bank, and that check was $240, and that check was subtracted from our balance, leaving this. And the deposit of $500 was received, we know by this, and added to this amount to get the $1105.20 and so on. All right, so, and check 122 was processed, check 124 was processed. Oh, wait a second, there's check 123 isn't in here. You see, that's missing. And a deposit that we made isn't in here. You see, the bank isn't going to check or isn't going to have listed here every single transaction which has occurred in any particular period. Because after all, if you send a check to someone who's out of state, for example, then the check may not have been processed in time for the bank statement to be published. And if you make a deposit on the very last day of the statement period, then it's not going to be recorded by the bank in time for the statement to be printed. So we have to kind of take those things into consideration. Now, to take them into consideration and to verify that our check register and the bank statement are consistent with one another is called balancing your checkbook. You see, you're looking at a bank statement, you're looking at your check register, and you're somehow trying to figure out if they're consistent with one another. And we want to talk a little bit about how that's done. Now, so here's the information. Now, I want to pay particular note. We're going to have to kind of jump back and forth here just a little bit. But a couple of things I want you to notice. First of all, the balance, the last balance, the ending balance on the statement is $510.50. All right, I'm making kind of a mental note of that. I want to also note that we have recorded here in the statement the deposit of $500, but not the other deposit. And also we have checks 121, 122, and 124, all right, but not the check 123. And we stop at 124. We don't have 125 or 126 on here, and we had those on the check register. Also, there is an interest amount here, and we'll talk about how to deal with that. All right, let's slide back over here. In in trying to balance this, to see if the balance that we have written right here or maybe further down is accurate, then here's what we need to do. We need to somehow designate whether or not the bank has processed each of these transactions, if they have taken note of these. Now that's the purpose of the column with the check. You see, because we can check off those items which have been accounted for by the bank in this column. Now, some people like to have different designations than just a check. Now, this check indicates that this item to the cleaners for $12.50 was processed during the last bank statement, and the balance in the account was $845.20, and we see that value at the top of the bank statement as the opening balance over there. So those two are consistent with one another, and we knew that at the end of the last period over which we had a bank statement. All right, now we want to balance this. Okay, we've got a car payment of $240. That's check number 121. Check number 121 is listed over there for $240. I can put a check here, or I can put another designation here. Now, I personally like to have different designations. I have at least three. I use a check, I use a cross, and I use a cross with a circle around it, because I want to know during what period. Sometimes if it gets complicated, I want to know during what bank statement period different items have been processed. That information is valuable to me to keep track of those kinds of things. But you don't have to do that. It's just kind of a suggestion. But let's just go with the checks here, because we kind of have a check at the top. All right, so this item has been processed by the bank. Check number 122 has also been processed by the bank. The deposit of $500, that's been processed by the bank. The check for check number 123 for $55 was not processed by the bank. The deposit of $300 is not on the bank statement either, but we do have check 124 for $200 listed over there. So this rascal is on the bank statement. Now, how are we going to balance? You see, the balance on this line is $750.20. The balance on the statement is $510.50. How do we know if those are consistent with one another? Well, we know by making a couple of calculations. But there's one thing that I want to do first. I want to account for the interest that was earned and credited by the bank. Now, not all checking accounts are interest earning accounts, but this one happens to be. So we have to account for that. And if there were debits, if there were charges by the bank or things subtracted, we would have to account for those things as well. So we need to put those somewhere over here. Now, my suggestion is that we put them into the deposit column, whether they are a debit or a credit. We put them into this column because there aren't very many things in the column. You see, and so we could add things here, or we could subtract things here if we're very, very careful. Or you could say, well, I'll make another line item for those. Well, generally you can't make another line item. That is, you can't make another item along a line this way because you have items in every entry, and when the bank statement comes, you have to kind of backtrack. You see? So you got to put them in one of these columns or another, and I think the deposit column is the best place to put it. Okay, we have interest of $5.30. So we have to enter that here. So I'm going to enter the deposit of $5.30 right here. Now, and I might even call this interest, you see, so that I'll know for myself where that deposit came from. A lot of times I'll write where the deposit came from in this, along this row as well. But that's another matter. That's just a matter of my own personal organization. But what I do have to do here is take this amount of interest that has been added to my account in the bank statement, and I have to add it in over here. So let me do that. So I'll add $5.30 to this. So I'm adding $5.30, and I'm going to take my handy eraser and erase this, and this will be $755. Adding 30 cents to 20 cents, that's 50 cents. Okay. All right, now I have accounted for the interest that this has earned, but I still haven't accounted for the idea of whether or not the bank statement and the check register are consistent with each other. Here's what I have to do. We can work from either the bank statement balance and work back to this balance, or we can work from this balance back to the bank statement's balance. I like to do it working from here. You see, this is my balance. This is what I think the accurate balance is, and I want to reconcile it with the bank statement. All right, the bank statement doesn't have on it these two items, the check for $55 and the deposit of $300. So all we have to do is take this balance that I have and undo these transactions. Now you see, the $755.50 reflects that I added $300 and subtracted $55. So to undo those operations, I have to subtract $300 and add $55. You see, I'm just unwinding these transactions in order to balance the checkbook. So here's what I need to do. I need to take this $755.50 and I subtracted the $55 before. Well, now I'm going to add it back in to sort of unwind that transaction. And I get $810.50. Now, if I want to unwind this deposit of $300, the $300 was added. Well, now I have to unwind it by subtracting it. So I'll take the $810.50 and I'll subtract $300. And I get $510.50. And this is what I'm comparing to the balance on the bank statement. And the bank statement balance, as I look over there, is $510.50. So this does balance with our bank statement. And I might even put a check over here to say, gee, this is the last point on my check register where I balanced my checkbook. So I can start from here the next time I go through this process.